Hi, Frank McLaughlin here again. Now, one of the bright spots that came out of last year was that now more than ever, people, when they're able to, are looking to give back and donate and support causes, organizations, and communities to help them rise up. And it lines up so well because now we have these amazing vehicles and ways to really maximize your impact and your gifts and also receive a nice tax benefit yourself. And so today I wanted to cover three of the main ways that I help families donate and also receive a benefit to themselves. The first one is donor advised funds. Now, a donor advised fund is an investment vehicle where you put funds in, you're able to receive a tax break, a tax benefit this year, and then you have the flexibility to give to organizations now or down the road when they need it most. Now, these types of vehicles are great for everyone. First off, because you can choose to have the money invested, and so it can grow over a number of years, and then you can give that to the charity or organizations of your choice and really just maximize and increase that benefit that they receive that wouldn't have been the same if you had just donated a smaller amount this year. Now, donor advised funds are also ideal for those in higher income tax brackets. Now, if you were to just give, let's say, a couple $1,000s per year, for most people, that's not going to be enough to itemize that as tax deductions. You would probably go with the standard deduction, which is just over 25,000 for a couple right now for a family. But what's great about donor advised funds is, let's say instead of giving, $5,000 per year over the next 10 years, what you could do is put $50,000 in today, get that tax break because it would certainly be enough to itemize, and then you decide over the next 10 years how those funds are distributed. It's this idea of front loading the charitable contributions, if you will. So, a great idea to think about. Now, the second point is donating appreciated assets. Most of the time, this would involve stock funds that you've had in non retirement accounts that have grown over the years and now have built up what's called unrealized gains. Well, to be able to use those funds or place cells, you would typically need to realize those gains and pay taxes on them. They're 15 or 20%. Well, a way to avoid that completely is you can donate those appreciated assets. Not only does that save you from having to pay that tax bill, but it's also 15 or 20% more going to the organization of your choice. So super powerful. And something that's really cool is you can actually combine that with point number one. So you could you could donate appreciated assets, put them into a donor advised fund, and possibly get a double tax savings where you get to avoid the capital gains tax. And then also you get to use it to offset your income for this year. It's a wonderful tool and something that not a lot of people know about. And my third point or third vehicle for you today is the idea of qualified charitable distributions. They're also referred to as QCDs. Now, once you reach age 72, you have to start taking required distributions out of your retirement accounts. So that would be an IRA, a 401k. Once you reach that age, the government forces you to start taking out a certain amount each year to pay taxes. They're ready for their cut at that point. Well, what you can do in lieu of required minimum distributions, which on those you have to pay income tax, is you could do a QCD. Or instead of taking out that amount for yourself, you could have it go to charity, and then you get to avoid the income tax. So again, tax savings for you, and really maximizing the benefit to the organization or the charity of your choice. Now, certainly if you're 72 or over, you could start taking advantage of that now, but it's also important for people who aren't at that age yet for planning purposes. The reason for that is it ties in with Roth conversions and these other ideas of, should you convert money from an IRA to a Roth? Or, if you're planning on just giving that money to charity, maybe it makes sense to just leave it in the IRA because you're going to give it to charity and avoid the income taxes yourself. So a lot of considerations there, a lot of moving parts, but I hope this gives you some ideas and things to think about as you look to go out and help others. Any questions that you have, I'm here and happy to talk about it. And I look forward to talking with you soon. Take care.